Imagine stepping into a serene coffee shop where the aroma of freshly brewed coffee fills the air and the gentle hum of conversation mingles with the clinking of cups. You find yourself among a group of seasoned investors, each eagerly discussing a time-tested approach to investing, the philosophy espoused in Coffee Can Investing by Saurabh Mukherjea. In this cozy setting, the investors share their personal journeys with this transformative strategy. You listen intently as they recount their experiences and the impact of adopting Mukherjea's principles. They speak of the simplicity of investing in a select few high-quality stocks and holding them for the long term, a strategy that goes against the grain of market volatility and short-term speculation. One investor emphasizes the peace of mind that comes from not constantly monitoring the market or succumbing to the urge to trade frequently. Instead, they have embraced the idea of letting investments grow steadily over time, shielded from the noise and volatility of short-term fluctuations. As the conversation unfolds, you begin to grasp the core principles of Coffee Can Investing: patience, conviction, and a focus on the intrinsic value of companies. You see how Mukherjea's insights have helped these investors navigate through market uncertainties with confidence, grounded in solid research and a long-term perspective. In this coffee shop, amidst the camaraderie of fellow investors, the philosophy of Coffee Can Investing becomes clear. It's not just a strategy, but a mindset shift towards disciplined and strategic investing. It prioritizes quality over quantity and resilience over speculation, aligning with your own aspirations for financial growth and stability. Discover how you too can apply these principles to your investment strategy, paving the way for long-term financial success. Part 1. Introduction to Coffee Can Investing. Let's start by understanding what Coffee Can Investing is. The concept is inspired by a tradition from the Old West, where people would place their valuables in a coffee can and leave it untouched for years. Similarly, in Coffee Can Investing, you create a portfolio of high-quality stocks and leave them untouched for a long period, typically 10 years or more. Visual Old West coffee can with valuables. The authors argue that this method reduces the temptation to react to short-term market fluctuations, which often leads to poor investment decisions. Visual stock market chart with ups and downs. Part 2. Mr. Talwar's Uncertain Future. The book opens with a story about Mr. Talwar, who faces an uncertain financial future despite his high income. This scenario is common for many investors who focus on short-term gains without a solid long-term plan. The lesson here is clear. Without a disciplined long-term approach, even substantial earnings can be eroded by poor investment choices and market volatility. Part 3. The core principles of Coffee Can Investing. Now, let's talk about the core principles of Coffee Can Investing. Focus on high-quality stocks. Invest in companies with a strong competitive advantage, robust financials, and proven management teams. Visual stock certificates of reputable companies. Long-term perspective. Hold your investments for a minimum of 10 years to ride out market volatility and benefit from the power of compounding. Visual clock with fast-forward effect. Minimal intervention. Resist the urge to tinker with your portfolio. Frequent buying and selling can lead to higher costs and missed opportunities. Visual, hands-off approach with animated portfolio. By adhering to these principles, investors can achieve higher returns with lower risk. Part 4. The Real Estate Trap. One of the critical chapters in the book is the real estate trap. The authors highlight how many investors, like Mr. Talwar, mistakenly believe that real estate is a safe and lucrative investment. However, real estate investments often come with hidden costs, low liquidity, and significant risks, especially in volatile markets. The lesson? Diversify your investments and don't put all your eggs in one basket. Part 5. Expenses Matter. Next, the book emphasizes the importance of managing expenses in the chapter, Expenses Matter. Even small costs can erode your investment returns over time. For example, High management fees in mutual funds can significantly impact your net returns. Choosing low-cost index funds or ETFs can help minimize these expenses and maximize your gains. Part 6. Small is Beautiful. In the chapter Small is Beautiful, the authors argue that small-cap stocks, though riskier, have the potential for higher returns compared to large-cap stocks. Investing in small-cap companies with solid growth prospects can be a rewarding strategy if you're willing to take on a bit more risk and do thorough research. Part 7. How Patience and Quality Intertwine. Patience is a recurring theme throughout the book. In How Patience and Quality Intertwine, the authors illustrate how high-quality companies can withstand market downturns and continue to grow over time. By staying invested in these companies for the long haul, you can benefit from their resilience and steady performance. Part 8. Pulling It All Together. Finally, in Pulling It All Together, the book guides you on designing your financial plan. The authors stress the importance of aligning your investment strategy with your financial goals and risk tolerance. They also provide a tool for creating your financial plan, which considers your income, expenses, liabilities, and goals. This comprehensive approach ensures that your investments are tailored to meet your long-term objectives. To sum up, Coffee Can Investing offers a simple yet powerful strategy for achieving long-term wealth. By focusing on high-quality stocks, maintaining a long-term perspective, and minimizing costs, you can build a robust investment portfolio that stands the test of time. If you found this summary helpful, don't forget to like, subscribe, and hit the bell icon for more insightful content. Happy investing!